The reason Bitcoin is going up, it's not an accident. It's because capital is economic mass. It is flowing from a high energy state, the mountaintop, to a lower energy state, to a more efficient state.
Bitcoin looks to be finishing off a monstrous year a little bit sluggish, as it dips down to the low $90,000 mark over the Christmas holidays. Many new investors are a little apprehensive and worry the top might be in. So today we bring in the big guns to explain why capital flowing into Bitcoin is like water flowing down a waterfall. Turbulent and volatile, yes, but nothing can stop the water from flowing. So after a monstrous 2-month run from 68K all the way to 108K, Bitcoin has cooled off to finish the year, correcting back a bit down to the mid $90,000 mark. And of course, the curious case of human psychology takes hold, and we go from being ready to quit our job thinking 1 million Bitcoin is around the corner, to scrambling back to our McDonald's jobs asking, do you want fries with that? Human psychology really is something to behold. We get used to these higher Bitcoin prices so quickly that we forget the price was hovering around 60 to 70K for most of 2024. Even with this small 15% correction, Bitcoin is still up a whopping 108% in 2024 alone. Try getting returns like that on any other asset on the planet in such a short time frame. Spoiler, you can't. But of course, Bitcoin returns really start to reach insane levels when you start measuring them over 5, 10, and 15-year timeframes. Take the example of this total Chad, who bought $30 of Bitcoin per day over the last 9 years. His total investment, $98,640. His portfolio is now worth over $2 million. As Saylor explains in this post, this is exactly what MicroStrategy is doing on a larger scale. The long game, 5, 10, and 15 years, can set you free. Start DCAing into Bitcoin now. For those that don't know what DCAing is, it stands for dollar cost averaging, and it's a tried and true Bitcoin investing strategy that many long-term holders recommend. First, you get your initial exposure, then you set up a recurring buy plan through a service like Swan, where you buy every day, week, or month. Set it and forget it for 5 to 10 years and see the results for yourself. This way, you protect yourself from the short-term volatility by buying consistently across the highs and the lows, which averages out your cost basis and takes the sting out of dropping a huge amount in at, say, 108K and panicking when it drops 15%. But this, of course, will bring up the question, how are Bitcoiners so sure about the Bitcoin returns continuing? Bitcoiners talk about its returns being inevitable. But how can this be? Well, Michael Saylor was asked exactly this on his latest appearance on Tom Bilyeu's podcast, Impact Theory. What resulted was quite possibly the best Bitcoin inevitability analogy we've ever heard. Here's the full clip, and I'll add some comments on the back end.
But I think where people trip up with your language is this idea of the inevitability of the 60%. What would you say to that?
So we're dealing with three concepts: risk, volatility, and performance. Okay, so I've addressed the risk issue by pointing out that there is existential risk in your given network or frame of reference. And I just want to make that point. Once you understand that risk of being in that frame of reference, then you have to figure out what's the source of the volatility and the performance. And if you don't understand why the asset does what it does, if you don't understand the economic physics involved, then you'll think it's random and you'll feel like the performance is risky. But I want to give you an example of a physical metaphor. I'm a hiker and I come across a mountain lake, and the mountain lake has 500 trillion gallons of water in it. And I look down and there's a waterfall coming off the mountain lake, and the waterfall is very beautiful and it's very turbulent, right? Water is turbulent in a waterfall. Water is not turbulent in a glassy lake. So the turbulence is volatility. And then I look at it, and now if you look and you say, I don't know why that water falls downhill. I don't know if it'll keep falling downhill, but I hate the volatility. Then I guess you can take a selfie in front of the lake, go swimming, get cold, and leave. But let's say you're not a tourist, but you're an engineer. So you come across the same lake and you see the waterfall and you see the 500 trillion gallons, and you think about gravity and you think about sunlight. And now I know how the water got there. The water got there because the sun shone on the ocean. The water evaporated from the ocean. It rose up in the clouds. The wind blew it against the mountain. It condensed and it rained into the mountain, and the water ran off the mountain into the mountain lake. I know how it got there. And then I think, if I create a dam near that waterfall, I build myself a dam, I put a turbine on the dam, and then I drop 1 billion gallons of water. I channel 1 billion gallons of water through the dam, drop it 60 feet. And then I plug that into a hydroelectric power plant. I spin the dynamo, I make electricity. And then if I'm really smart, I run the electric power line to a village down in the valley and I light up the village or I light up the city. Now, someone can come along that doesn't understand physics and they can say, good idea, Junior, but what are you going to do when the water stops flowing downhill? I'm like, I actually think the water's flowing downhill because of gravity. Newton solved that for me. And then someone else comes along and says, good idea, Junior, but what are you going to do when you run out of water in the lake? I'm like, there's 500 trillion gallons, and I take out my calculator and a billion gallons or whatever. It's going to last a long time. It's eventually going to run out. I say, the sun keeps shining on the ocean, and the ocean keeps lifting the water out of the ocean, and it drops it on this mountain. And that's why there's water in the mountain. But you're right. There's some kind of natural limit. And I suppose there's a limit to the amount of energy I can pull off of this dam, but it's a large number. It's a lot more than your donkey cart, and it's a lot more than your steam wood stove, and it's a lot more than your coal power plant. And maybe it's a lot cleaner than burning gasoline. So I'm an engineer, and you're seeing performance thinking it's random, and that's why it's going to stop. And you're seeing volatility, and you're thinking it's random, and maybe it'll stop. And here with Bitcoin, the reason Bitcoin's performing is A, it's volatile, but B, it's a more energy efficient state. The water is flowing down 5,000 feet because it's a lower energy state 1,000 feet below the mountain. You've got potential energy in the water and it wants to go to ground, and that's just physics. The 500 trillion gallons of water is $500 trillion. And the $500 trillion of assets are sitting in real estate and currency and sovereign bonds and corporate bonds and artwork and equity. And they're invested in the stock of a company in Africa that's going bankrupt. They're invested in real estate in Cuba, in Venezuela. They're sitting in a warehouse that's crumbling. It's got a 40-year life. You invested $100 billion in a war zone, and then a war broke out, and your asset got devalued. All of the things going on in the world, the war, the chaos, the competition, the inflation, the entropy, the passage of time, the hurricane, all of these things impaired the value of your assets. The reason Bitcoin is going up, it's not an accident. It's because capital is economic mass. It is flowing from a high energy state, the mountaintop, to a lower energy state, to a more efficient state. It is steam condensing to water, condensing to ice, giving off energy, just like in any chemistry lab, you would learn this. And at the same time, there's this volatility driver, Tom, which is you have an open capital market. And on Saturday night, when there's a missile crisis, someone can make a $10 billion short bet, levered up 100 to 1 and panic. And they can do it in Bitcoin. And then on Sunday morning, when the missile crisis has passed and nuclear war did not break out, they can go long and they can reverse the trade. Bitcoin's the only asset where you can sell $1 billion of it in a minute at 100 to 1 leverage, and you can buy $1 billion back in a minute with 100 to 1 leverage on Saturday night and Sunday morning. If you could do that with your Upper East Side apartment, then property values in the Upper East Side would also be more volatile. And if you could do it with Picasso's, that would be more volatile. Because if people get drunk and they panic and they short your asset 100 to 1 and change their mind 6 hours later when they get up with the hangover, you're going to have volatility. The volatility is a feature. It's not a bug. It's because it's the most useful thing in the world from a capital market point of view.
So Saylor is saying what many who have studied Bitcoin for more than 100 hours already see. Bitcoin isn't some high-risk, high-reward investment that might go up based on the whim of company performance or geopolitical conditions. It has quite literally become a force of nature unto itself. It swallows up more and more capital as more and more investors learn what it really is. This is why someone like Saylor and many others who don't have as deep pockets as him or access to cheap debt like he does say they will be buying the top forever. See, Saylor isn't worried about buying 5,000 Bitcoin at $106,000 per coin like he did last week because he knows that he's planning to hold the Bitcoin for a very long time, or in his case, forever. So once again, I implore those that are new here, don't panic about this little dip. If you bought in at over 100K and you're a little worried here, take a deep breath and maybe pick up a Bitcoin book to increase your knowledge and conviction. This was never supposed to be a buy now and we teleport to 1 million and we're all rich. This isn't a roulette wheel in Vegas. This is not a get rich quick scheme. It's a don't get poor slowly scheme that will also make you fabulously wealthy, but only over the long term. So stay calm, maybe set up an automatic buy plan with Swan, and get back to relaxing and spending time with family and friends over the holidays. Visit swan.com or download the app by searching Swan Bitcoin in the App Store. Sign up, and within minutes you can start buying. And you get your first $10,000 in Bitcoin purchases with zero fees. Visit swan.com now to get started with your Bitcoin journey. Also, shout out to Mara, the largest public Bitcoin miner, for supporting this show and for helping make the Bitcoin network the world's most decentralized and secure monetary network. That's it for today. Let me know what you think of this dip in the comments below. Like this video, share it with your friends and family, and of course, subscribe to the channel for more high signal Bitcoin content. Thanks for watching, and remember, TikTok next block.